Welcome to our Discovery Conference panel today. My name is Sam Doss. I am a managing director at TruStage Ventures, and I'll be today's moderator. We're excited to bring you a lively discussion around a topic that is near and dear to all credit unions, large and small alike, non-interest income. We're all aware of the pressures that credit unions have been facing around more traditional sources of NII. But we acknowledge it. We realize it's an ongoing debate. But today's discussion will be focused more around our opportunities and how we can really move forward as a industry. We know full well that we'll not be able to cover all these topics in the short time that we have today, but really wanted to spark the conversation, and hopefully we can spark that conversation into live in-person dialogue once we're all out of this conference. So with that, I'd like to introduce you to our esteemed panelists. First, we have John Anderson, Chief Lending Officer of Atlanta Postal Credit Union, Sarah Martin, CEO of Pulsate, and Nikki Hendrickson, CEO and co-founder of Clutch. Why don't we take a few minutes right now? Let's go around and let each panelist introduce themselves and share a little bit about their organizations. John, why don't you kick us off?
Yeah, thank you, Sam. John Anderson, Chief Lending Officer at Atlanta Postal Credit Union, here next to the airport in Atlanta, Georgia. We're about a $2.5 billion credit union, so I cover consumer, mortgage, and business lending. Excited for the discussion. I know it's certainly non-interest income's on the top of our minds. So looking forward to the discussion. Appreciate being part of the panel.
Absolutely. Fantastic. Welcome, John. Sarah, why don't you go next?
Thank you, Sam. Delighted to be in such good company today. Thank you for the opportunity to participate. I'm the CEO of Pulsate, and we work with just shy of 200 credit unions today across the United States. And we help them grow many things, including non-interest income, by turning existing digital channels into revenue engines. And I'm so delighted to count APCU and John as one of our many customers, and with Clutch as one of our future partners, and TruStage a partner, of course. But I guess we would be what we call that growth layer that connects the credit union to their member, and we sit inside the existing digital banking footprint, surfacing the right offer, the right content at the right time, and just making it super easy for those members to take that action, whatever that may be. Maybe it's sign up for Skip and Pay or sign up for a new loan. And today, I guess my orientation for NII will be about how to monetize what you already have, rather than necessarily advocating for additional products.
So Sarah, if you call yourself the growth layer, I'll call us the onboarding layer. We're Clutch. I'm the founder and CEO. Our goal is to make it as easy to bank with a credit union as it is with SoFi, Upstart, Upgrade, or Carvana on the lending side, or think of Chime or maybe even Coinbase or Chase on the deposit side. So if you want to become a member of a credit union, be it for a loan product or deposit product, you want that to be a frictionless experience. You don't want to have to go to the branch to finish the process. It needs to all happen on your phone. And then for existing members who want the deposit product or lending product, they should also go through a frictionless experience. And the goal is always not to just give you what you're asking for, but think ahead. So if you get a deposit product, why don't we look out for you and see whether or not there's a loan you're pre-qualified for and or you could save on. And every single time we think about loans, we think about protecting the member, protecting the credit union, and generating non-interest income. Credit unions often ask themselves, well, I have a certain efficiency ratio and I want to improve that, which is basically how many dollars do you need to spend, or how many cents do you need to spend in order to generate $1 in revenue? And oftentimes you find credit unions, they want to save themselves out of a revenue problem. We're like, no. Give more loans. Let technology do the work on your behalf. And so we believe every loan is a non-interest income opportunity, and it's not a sales effort, it's a service effort from the credit union perspective to protect the loan. Yeah, I appreciate being here too.
So why don't we jump right in and kind of take a step back and look at where the current landscape is for non-interest income. Obviously, there's been a lot of changes over the last year or so. How how has that landscape changed, and what has that really, how has that impacted credit unions? John, why don't you kick us off from the credit union perspective?
Yeah, perhaps uniquely to us, we sold our credit card portfolio probably 2.5 years ago. So that was the main driver of non-interest income for us, interchange and the fees that go along with that. More globally, we see the news, we see the regulations about caps and limitations and doing away with all these fees. So the need to come up with innovative and new sources of non-interest income has been top of mind at the center of every strategy discussion we've had at the credit unions, probably for the past year and a half. It's been a shift from always focusing on interest income. That's a tough game to play. We do the best we can, but the non-interest side's probably a larger part of our discussion going forward.
Have you leaned in any particular area?
Yeah, there's not been a single arrow that we've found that's been successful. I think leaning on partners is probably the best way. We've got two of our favorites here on the panel, but just finding ways to get members are not coming to us first anymore. We're noticing we're ending up having to buy loans that our members have done with fintechs, with other institutions, even many times at more expensive rates and fees than we would have charged had they just come here. So probably our driving strategy has been how do we inject ourselves into that purchasing decision before it's too late.
Sarah, that's probably a good segue into how you guys have been working with APCU.
So we work with, we're one of the levers that John and his team use to drive lending growth and indeed also non-interest income. And we see it across, well, unlike APCU, we see most of our customers driving interchange as a primary NII source, but also seeing a shift, and it's actually a cultural shift and a mindset shift, trying to move away from the punitive fees and creating balance with value-added NII products. So the industry is heavily dependent on NSF, for example, but a growing number of our customers, and I've been talking to John's team about that as well, is how to actually balance that, because you can't just turn it off. You need to balance that. So what are the value-added products that APCU and other credit unions, big and small, have that their customers, their members just don't even know about yet? And how do we make that relevant in a moment of need? For John and his team, a skip a pay campaign or offer can be made at a very timely way because they have the ability to tell us through the data flows where when a balance is low, and a skip a pay may be a solution to that customer, and we're able to handle that automatically for them. But other smaller credit unions are able to just use Pulsate to say, hey, don't forget we have skip a pay at a relevant time, like close to Christmas or indeed during a pandemic, and being of service and creating value, to Nikki's point, being of service with those value creating NII products. And we're really seeing our customers just being a lot more strategic, a little bit more long-term in their thinking and creating that balance. And we have had a number of our customers turn off NSF.
Nikki, how are you seeing it from your perspective on just the changes and how Clutch has adapted to work with ratings and
Chris, my co-founder, and I had the advantage of running a different business prior to starting Clutch, which was a digital car retailer that we sold to Carvana in 2017. And then as we spent 3 years at Carvana, Chris did very little but figure out how to increase the attach rate of, for example, a warranty or a gap protection. And the reason that matters is because, jokingly, we always said, we only sell cars so we can sell loans and protection products, because those are the high margin products. And the car is actually the commodity. And now on the lending side, if I was a credit union, I would think about it the same way. The money I lend is a commodity, it's green. The easiest way to get it is the one that the consumer will choose, because today, John, I don't want to put words in your mouth, but I bet you don't compare yourself to other credit unions. You compare yourselves to the Amazon, the Ubers, the DoorDash, all these apps on your phone that make it so easy to access whatever the consumer wants. So the loan is just the means to an end to sell protection products, to drive non-interest income. And from our perspective, we have started to, and have come a long way, apply a lot of the lessons we learned from our past professional experiences to credit union lending and to selling and upselling and presenting protection products in session when you have the attention of the consumer. The consumer doesn't buy these two products separately. The consumer comes because he or she wants a loan. And then it's our job to create these frictionless experience that protecting the loan becomes intuitive, a no-brainer decision, and a presentation that's incredibly consistent and therefore compliant. Because traditionally, credit unions do it manually. They get trained, the staff gets trained, and it's not really in the DNA of a credit union employee to sell. So a lot of credit union employees are just uncomfortable. Number two, there's a lot of attrition in the credit union, especially in those roles in the front line. So the consistency is not always high. And if you let the machine do it consistently with a good experience, you should have higher attach rates and much higher compliance rates, if that makes sense.
Actually hits on kind of what we're seeing with product innovation, particularly around embedded solutions, like you're mentioning. How is that changing strategy within the credit union? From your perspective, John, is that, are you turning more attention into that overall member experience, that member journey, and figuring out, how to present those types of opportunities when, to Nikki's point, when they're actually engaged?
Absolutely, yeah. And to Nikki's point, we are finding more and more of our members, they actually look at it as an advantage to not have to interact with a human. So they're not walking into the branches. They're not calling us up asking for a loan. They're scouring the web. They're searching who has the lowest rates. They're coming through our digital channel. So the ancillary products, just to mention one, that's not ever something we even dreamed of being able to sell digitally. It's a very high touch, complicated sales process that we're remiss to miss out on that income. We know we have to switch to a digital delivery model. That's what our members are asking for. But the ability to present that within that digital experience is beyond our capability as a credit union. So, luckily there's partners out there that can help us deliver that. We're excited. We're not there yet, but we feel like if we don't do that right, we're just going to miss out on that opportunity altogether. So definitely top of mind this year.
I mean, that hits on a key point, right? I mean, there's going to be this growing demand, but at the same time, there's also going to be those members that still want that human interaction. And so, how can the credit union provide that optionality and flexibility? And even if they don't bite through the digital journey, doesn't mean that's the only time that you'll ever be able to interact with the member to present those type of opportunities. So.
No, that's a good point too. We, strategically, we've been lamenting the the average age of our member has just been increasing, and now that we've been strategically targeting a younger generation, I don't think we were prepared for the digital needs of that generation. So it's I don't know that we anticipated that, but we're trying to pivot quickly and deliver it that way.
Well, John, maybe it's good that we today launched the Gen Z version of the design of our portal. So, turns out we're a step ahead.
That doesn't surprise me.
There's actually, Sam, one thing that I think we shouldn't lose sight of. Credit unions have been selling these products for a long time, and when you have staff who's good at it, they're very good at it. And the goal is not to change the presentation, but to learn from what the best sellers of these products have done traditionally, and then embed that in the digital channel. And interestingly, a protection product is best sold if you tell to the consumer, your monthly payment is $250. If you want to protect it, it's not extra dollars. We just add a little bit of a term because the consumer gets fixated on their monthly payment. And so if we can mirror what's worked really well in the in-person sale and make that the digital presentation, there's no reason why the digital presentation should be worse. In fact, it should be better because you'll present these products every single time. Does that make sense?
Yeah, absolutely. Sarah, I mean, from your perspective, in terms of managing the messaging for that type of experience, how do you see that? How do you see the credit unions taking advantage of the data that they have to better create those personalized experiences to unearth whether is this something they're going to interact digitally or do they want to interact potentially offline with a human?
So it's, I think John makes a really good point because not every credit union is set up to sell their NII products digitally. But with Pulsate, John, and True Lion, for example, is a great example. They were not set up to sell their auto insurance digitally, but they were able to set the target, create a campaign within Pulsate to create opportunities, which they could then follow up on through their traditional channels. So not everybody's ready, and every credit union will be at a different stage of development. But through the use of targeting and understanding the customer's needs and their moment of need, that can actually really be helpful to drive value. And it has to be a bit at a time, right? Because you can't go from zero to perfect. You have to and we see every credit union is on a journey and we are helping them regardless of what stage they're at. Another example, I guess, Nikki's the one that we're working on together, is an automated campaign based off of your member has taken a loan elsewhere, automatically offer them a refi. So that's possible with the connection between with Pulsate and Clutch to be able to say, hey, you've got this new loan, you want to refi with us and save. And the message can be personalized down to the last dollar, for example, or it can be much more simplified. But just knowing that they've taken a loan from somebody somewhere else and you're offering them something better, that's a use case that Clutch and Pulsate are working on and our customers are pretty excited about. Of course, NII is then built into that, right? Because every time Clutch is creating a new loan product or deposit product, the NII piece is built in. So there's always a comparable uplift in insurance products, for example.
I think that's a very important lesson to learn here is you don't have to have the full, it's great if you have the ability to do the full end-to-end experience digitally, but it's important just to get started, like engaging at least within part of that digital journey and going offline. I literally right before we started this, I was editing a internal presentation within TruStage, and literally in very big letters, I just write progress, not perfection. Like, just get moving and get started. That's all you need to do. And it'll take care of itself because then you'll see the progress and you'll want to invest in, deeper solutions. So, I think that's an important thing to take away. It actually leads me to, my next question, particularly when, so many smaller credit unions lack the internal resources to, put solutions, fintech solutions out, integrated into their own systems, let alone, delivering it to their members. Like, what can those smaller credit unions do to help both drive NII, but also kind of meet this digital need that so many members are looking for?
Yeah. So we happen to have a really fun pilot about to kick off with John's credit union where we want to figure out how can AI create efficiency gains in the credit union. And so one area that we're exploring with John is automating some of the collection calls, for example, where instead of a human being dialing for dollar, which there's no such thing as collections enthusiasts. So it's not a great job usually. And you also want consistency. There's compliance implications. So we're exploring the opportunity to use AI to make outbound calls. And instead of doing like hundreds a day, you can do thousands of a day. You can show up really friendly. That's all configurable, which is nice. Something that we haven't talked to John about yet, but we're about to is, well, why don't we call your members who recently got a loan and offer protection products also digitally? again through AI voice dialers. That would be an incredible service offered from the credit union without adding more people. And this is the perfect example of, Sam, we just need to get started and run a pilot. If you overthink it, this project is dead before it started, because the implications and all the ways it could go wrong are massive. But if you reduce the scope to a small pilot and control it, I think you'll learn a lot. And I'm 100% sure that if you call your members and tell them, here's 3 ways to protect your loan, that more than zero will take you up on it and will be really thankful, and will talk to their friends and other members how good of an experience they had with Atlanta Postal, because Atlanta Postal looked around the corner and was there for them when they needed them.
Well, Nikki, sign me up for that, please. I did not know you were working on that, but I'd love to hear it. And I'll echo the collections piece. I can't tell you how nervous I was to go to my peers and the board and say, hey, I've got a great new idea. We're going to have an AI robot call our members that are delinquent and smooth it over and make payment arrangements and get them current and offer workout plans. And after hearing what Alex and the team at Clutch put together on the collection side, I have to. We did some testing where we, listened to some test calls and gave feedback, and after a while, I had to remind myself that I'm listening to an AI robot delivering this message. It's incredible, and that's, in a time of high delinquency, especially for a smaller credit union, you can't just throw more head count at that problem. The ability to leverage solutions like this one with Clutch. That's I think the only way to improve delinquency numbers, charge-offs. That's a huge strategic KPI for us, and so we're really we're about to turn it on. So I'll let you know the proof will be in the pudding, but we're excited to see how our members react to that.
Appreciate your openness to explore it. I think it'll be awesome.
I can't go through any conversation without bringing up AI, but the reason it comes up so often is because it is such a force multiplier in how the credit union can just reinvent its own business. Not only because it hits on 2 key areas: driving more efficiency, just doing more with less people, like you mentioned, but then that also creates a gateway to these growth opportunities. Because even if you could hire till you're blue in the face, there's a limit to hours that you can actually reach members, and how can you actually get leverage from what you already have off the shelf to get into the hands of as many members as possible. So that's fantastic. And again, you don't need to unleash it on all your members. Run a pilot, get the learnings, and then make the decisions on whether you want to expand and invest in those types of solutions, because it will pay dividends. Just the exploration will pay dividends. So that's a great lesson to take away. Everything we do in the credit union system it really revolves around the member. How do you feel like these embedded products and opportunities to drive non-interest income will enhance the member experience? How is it changing, how members view the credit union?
Yeah, I'll reference a prior discussion. I think it's the best thing we can do is become the first stop for our members when they're in need of a lending product. And that's, Sarah mentioned some of the ways we're able to do that through our mobile app. That has become our primary touch point for members. I know I can't remember the last time I went into a branch. Very rarely will I log online, but I use the mobile app every day. And so our ability to put pertinent offers, relevant offers, timely offers, that's crucial. That's not something that we could do internally on our own. We have amazing click-through rates, engagement rates with those messages that Pulsate delivers. So that's our hope, is that our members don't have to go Google who has the lowest mortgage rate, that if we get intelligence that they're in the market, that they're shopping, that Sarah and her team will go ahead and deliver that message directly to our member before it's too late. And they've shown an incredible ability to do so. So very appreciative for her team and our ability to just be the primary go-to financial institution. I think we've almost abandoned that term. Nowadays, it's hard to to become the PFI for our members, but I think it's through those channels that we'll at least have a fighting chance to become that.
Yeah, absolutely. Sarah, how are you working with credit unions to optimize that digital experience that John just mentioned? And do you have some case studies or use cases that you could share?
Yeah, sure. I think one of the things when we talk to our customers is when we specifically around the NII, it's around being of service. So let's say in John's case, they're driving auto lending. And historically, it may have felt as by the human to offer an auto related insurance product during that engagement will be too salesy, right? But if you're offering payment protection, you're actually being of service to the credit union. So there's two things. You obviously, John is embedding that into the application form with Clutch. And then on the other side, Pulsate is able to identify when that has not been selected and send reminders and retarget. And that's just a really important piece to remember, that most of these value creating NII products, when you're offering them or reminding your members about them, it's actually you're being of service. They are not seeing it as being salesy, because a payment protection product is extremely valuable to somebody who's potentially close to not being able to make their mortgage next month, right? Or whatever the use case is. So being of service and showing them that, like what John said earlier, that you're actually there for them, then they're going to choose you every time. During the pandemic, when our customers were able to make sure that their membership base knew about their skip a payment program, the rate of adoption for that product went through the roof, because everybody was so worried about the cash flow for the household. And it wasn't massively difficult for them to do that. But we still hear today, 4 years later, that they have customers at the branch or on the phone saying, I remember when you sent me that message and how important that was to me in that moment. So building the relationship. I know, Nikki, you speak about giving the experience of SoFi or on neobanks. At Pulsate, we talk about the engagement layer similar to a neobank, but better, because it's bridging that gap between the personal and the digital. So we often, part of our platform, John, I know you guys are starting to look at this piece as the opportunities engine. So when you start the application, but you don't finish it as a member, for whatever reason, we get distracted, the doorbell goes off. And with Pulsate, you're able to automatically retarget, and it's nice, and it's super easy for your team to utilize. But with the opportunities engine, you're also able to just know who it was that expressed an interest digitally and just make a phone call. So instead of making outbound calls, John's team will be able to say, I notice you're interested in this product. Call them and say, I notice you're interested in this product. How can I help you with that? So it's much more efficient, but there's no SoFi SoFi's not going to ring your member. They're not going to ask them, can they help with that? So you're already doing these things. You're already putting these personal touches to it, but just being so much more efficient with that energy. We see that's happening so much across the credit union industry in particular. And I really like that balance, because it's coming back to the heart of what makes this movement so critical to the country.
It's a good point. You have to look at the long game, right? We're so used to the one for one transaction, but to your point, like, we're trying to build a relationship with these members, and that goodwill lasts a long time, but the goodwill is worthless if you're not presenting them with relevant opportunities. So it's a combination of both the old school mentality of developing that one-on-one relationship, but leveraging technology to really deliver things that are going to be meaningful to your members' lives, when they need it the most. Yep. Nikki, from where you sit at Clutch, obviously there's been so much focus on onboarding technologies and how to really differentiate the experience. As Sarah mentioned, what a lot of these, particularly like the Gen Zers, are experiencing through the neobanks. How can credit unions kind of lean into these onboarding journeys to really differentiate themselves and at the very least, level the playing field?
There's like two thoughts that come to mind. One may be a little controversial, the other one makes more sense. So, as much as you just highlighted that cranes and their consumers have these long-term relationships, I'd argue a good vendor crane relationship is exactly the same. Whereas we met John, almost 3 years ago, and the product that we first implemented was very different than all the things we're running in parallel and exploring with the crane right now. And the reason I mention that is that there's a lot of shiny objects right now. Like the credit union space is overrun with vendors. I know so many so many credit unions who go to conferences and turn around their badge these days because they don't want to be approached by yet another vendor who also does onboarding. And so the point I wanted to make here is there's a lot of shiny objects. If the cranes choose the shiny objects, they actually go away from what they need. They go away from having one partner that helps them be successful. They're doing exactly what the confused consumer does. I have a loan here and I have a deposit here, and nothing is combined, and I'm not getting the holistic experience and the service I need in order to be successful. So our best relationships with cranes are the ones that started with one product and then we jointly explored the next and the next and the next, because it's like a holistic experience I need to create for the consumer on behalf of the credit union, for the consumer to then be as engaged as we wanted to be across loans, across digital banking, so Sarah can serve them across deposit products and then the protection products. Number one. And number two, our job is to make what John described a very complicated process of selling a complicated product incredibly easy. So easy that my mom would be like, I want that, click a button. And so the devil's in the detail. To take complexity out of something through user experiences means a lot of work goes into showing something that looks incredibly simple. So just the ability to check the box, yeah, they can sell protection products in the onboarding experience, it gets you nowhere. You need to really lean on somebody who's seen a million data points, who's tried a bunch of things, tested a lot of experiences to see how they convert. And that only works if the crane and the vendor partner agree that they're in this together and have a long-term relationship. Does that make sense, Sam?
Yeah, absolutely. And John, I'd love to get your perspective on how within your credit union you made the decision to make that onboarding experience a large priority for your credit union, but then going through that process of, to Nikki's point, there are so many different providers out there, and there's a lot of similar ways of how everyone describes it all. Like how do you maneuver those waters and find the right partner to help you on that journey?
Yeah, I always I laugh when I recall this story because I got egg on my face. I talked to Clutch long before we engaged with them, and I was way off base on what I thought they did and what they actually did. So our initial discussions were around the massive dropout rate for our online loan applications. And, when you go through that experience, it's not a surprise. It's 4 or 5 pages of 10 or 15 questions on every form, and you can't proceed, you can't save and resume where you left off. So when Nikki said, I think it was 90 seconds at the time, but he showed us a demo. You can get an application submitted, and this is how easy it is. We'll ask 5 questions, and then the loan will be in your LOS. We said, okay, well, prove that. And they did. And unfortunately, organic growth happened thereafter. Our members started complaining, how can I apply for a loan application in 5 seconds, and then it takes me 3 weeks to get a deposit account open? So we called Nikki back and say, hey, can you help us with that? And so I think we started to judge our vendor relationships, and we've got several very strong relationships, but the ones that we continue to come back to for member demands and future products, those are the ones that are so meaningful for us. And it's just made a world of difference. We no longer have application dropouts. If you drop out of a 90-second application process. That's probably a loan we didn't want to begin with.
As you implement these technologies, how are you facing the challenges of getting the members to really engage with that journey? Are you thinking of it very iteratively in a test and learn mentality, or are you setting up specific milestones and KPIs around how you're measuring success? Curious how you're viewing it as you get these programs up and running.
Yeah, it's tough. I think we lost a little bit of time. Maybe as recently as a year or two ago, we finally appointed a chief digital officer, and it wasn't a primary channel for us. It never really was. Of course, nowadays you can't live without that. So the vendors that help us provide those touch points, Nikki will let us know if we're losing somebody in part of that process. They'll bring it to our attention. We don't have to rely internally to identify that. And same thing with Sarah. She shares our engagement rates and the click throughs and pull throughs, and I'm amazed. I don't know. I'm not smart enough to track that. I'm not a techie guy, so I have to rely on partners for that. But I think a good vendor will bring that to your attention without you even having to ask.
All of this hinges on getting your solutions into the credit union in the first place, right? And that's, for particularly smaller credit unions, that's a huge hurdle. How should credit unions prioritize what capabilities they ultimately need to not only get these technologies in, but then to drive the programs that will ultimately help drive non-interest income for them? Sarah, how have you advised your credit unions on that?
Honestly, we talk about revenue drives the mission. It's very hard to serve more members without driving revenue, and there are not that many levers, so NII is definitely one of them. And when we talk to our customers and we are on board, when we're selling and then onboarding, we talk about, well, where are you currently underserving your members when it comes to the products that drive revenue? And let's focus there. And like that, we start with the lowest hanging fruit. And over time, then Pulsate will learn based off of what the customer actually wants. And you will eventually be able to use Pulsate to say, these customers need these products. Make sure that they are aware of those products in those moments of need, and just adjusting to the needs and demands of the customer. Like APCU, our customer has evolved substantially since he became a customer. It's actually continuing to evolve, and I know our teams are talking about the opportunities engine. But yeah, I guess it's about finding and it's about ROI. But knowing that the first piece of that journey is not the full journey, and that we walk that road together, and that John and other customers are aware that we do that with many other credit unions, and we do that successfully, and we drive those revenue numbers because the revenue funds the mission.
So Nikki, given that backdrop, with the technology capabilities that credit unions need to implement these, and the reliance that we have on so many different providers, how can credit unions kind of overcome some of these challenges?
The relationships we foster with our credit unions all start during the implementation process, and we somehow quantify how healthy a relationship is, and the three pillars of that method, or that metric, client health, would be measuring the relationship. Would the credit union refer us, or would they serve as a reference if we asked? Do they get the validated business outcomes, and have we deployed and implemented all the products? So for us, the number one goal is to do an incredible job during implementation, so the credit union gets all the value out of it. And during implementation, we therefore show up increasingly more opinionated around how to configure the platform. The platform is very configurable, sometimes to the detriment of the credit union. And so I'll give you an example. We have two credit unions. They're live on the account opening solution. On one credit union, we see 30 out of 100 people who start the application to fund an account. And on the other one, we see 45. And the reason why 45 out of 100 open an account successfully and funded versus 30 is because one credit union followed our strong recommendation to do what we call a non-documentary CIP process. So we don't ask every single person for an ID, only if and when we need to. And so if we show up opinionated, then sometimes that creates an interesting experience during implementation, because the credit unions tend to say, but we've always done it this way. And then the easy way to respond to that would be, okay, let's just do it how you've always done it. But then you don't achieve the business outcomes that we stand for and we want for the credit union. So by being opinionated and leading with setting the expectations that there will be change, we sometimes force ourselves to have difficult conversations early on, but it always pays off later on in the post-go live phase and then in the real relationship. So by having done this 150 times, by having real data to substantiate the claims we're making and recommendation we're making, and by having the confidence to show up opinionated, we feel like we've been able to build stronger and more successful relationships even than just following the guidelines or the guidance the credit union employees give us, because we're here to make a change and not to rebuild a system that fits to the old processes.
Yeah. And I would give yourself more credit than just the opinions that you have. Those opinions are formed by the seeing this happen, to your point, 150 times, and so you're bringing real insights to credit unions that are looking at it with fresh eyes. And so it's not something that they do every day, and that thought leadership that you can provide is invaluable. And kind of, John, going back to what Sarah was mentioning, just in terms of deciding that revenue and growth is a priority, and then realizing it's going to take investment, and with that investment comes everyone rolling up their sleeves a little bit and contributing not only capital but the human bandwidth. How are you making these decisions within the credit union, within your management team, convincing your board to go on that type of journey? How have you been able to manage all?
Not without our fair share of intense discussions. I have to give a shout out to our project management team. They always hate when I reach out to them. They feel like we're trying to do something new every month, and it does feel like that. Things are evolving so quickly. I feel like we're working in warp speed. When you're able to show the positive results of a partnership and a product rollout, I don't get any pushback on new ventures. We're choosing the right partners. We know what our expectations are going into it, and then once we're live, we monitor that pretty closely. So it's the investment, the willingness to roll up our sleeves. That's all there. I think it's just to Nikki's point, don't over engineer the implementation. When we were setting up our deposit account process, we were like, okay, Nikki, when are we going to send the signature card? Are we going to mail it out? And what do you mean we don't take an ID? And we're not going to get their mother's maiden name. We have to be willing to, as we evolve, and we're embracing this technological revolution. We say all the time, stop doing things just because that's the way they've always been done. And I think for other credit unions, you just have to make sure that same philosophy applies to new vendor onboarding. Don't try to fit your new vendors into your existing processes. That never works, and it's just a battle you don't want to fight.
Yeah, that makes sense. We're getting towards the end. Before we do that, I did want to take a step back and primarily for Sarah and Nikki. A lot of the things we've been talking about have been more credit union focused, looking at the internal struggles. But as we look outside to the broader market and where we see opportunities, what are some things that credit unions should be paying attention to that's happening outside of their ecosystem that could lead to either inspiration or at the very least, get into the minds of their members as to what they're seeing out there. What should they be paying attention to in your mind, Sarah?
My thought would be less kind of cutting edge, but cutting edge for banking, I guess. I think if you look at the most successful digital companies in the world, they are excellent at retargeting. How many times, like how many emails do you get when you click add something to your basket? They do that because it works, because people forget. I think retargeting is one of the, well, it's a limitation of data flows, right? Retargeting within this industry has classically been almost impossible. Like if you started to apply for that loan but you did not complete it, how would you possibly retarget them? So for me, I think that idea of retargeting and being able to solve for that can be one of the biggest drivers of growth within this industry over the next couple of years, because how many of your applications get abandoned, John? Like it's not small numbers, right? If you can change that by 5-10%, you're literally changing the numbers of your entire organization. So yeah, it's a bit of a funny one. What comes to mind is the ability to retarget, because I think other digital first companies are extremely good at it. Our neobanking competitors are extremely good at it. And working with partners like Clutch and Pulsate, especially when they will work together in order to fill those data gaps so you can be relevantly retargeting to your customer base. Like I would say that's really a cutting edge strategy in general, but in particular also around the topic of today, which is non-interest income.
Yeah, you bring up a great point, and when I talk to credit unions, they sometimes have hesitancy to email their members, push notifications to members, whatever it may be, because they don't want to annoy their members. But as you look outside, I mentioned this to a couple of you before. I'm doing Duolingo with my family, and they are aggressive retargeters. They engage me through push notifications, emails, and text messages.
Which languages are you learning?
Well, German.
Obviously.
Yeah, and they are non-apologetic about it, but it gets me to engage every single day, and it's effective. Granted, that type of strategy won't work for certain types of products, but credit unions shouldn't be afraid to lean into having that type of conversation with their members and being able to change up the types of messaging that they have for their members, both to personalize it as well as to lean into kind of the value prop that these products are actually going to help benefit the end member. There's tremendous opportunity there.
And there's a whole generation of digitally banked that only have that experience
Yeah.
from companies. So if you're not doing it, they're not going to think of you. I'm not saying Duolingo side, but it's about being top of mind, making sure they think of you when they have the financial need, and then being there when they have the need with the right offer and the right service. And don't let them forget that they need it. It's not heavily salesy. Everybody here, everybody watching, they're all using neobanks for something. They're definitely getting retargeted from them. Why would your members expect less? They expect more from you because they've been with you for longer. You're part of their communities, that you're part of their families. So there is just an obligation to serve them.
Nikki, what takeaways should credit unions take from the outside market?
I just had a really interesting conversation on Monday with the credit union CEO, and he told me he is third generation credit union CEO, so his dad and his grandfather was involved too. His dad has been working for the credit union for 65 years. And just recently, so from like a student, I guess, all the way to having been on the board. And that person just retired from the board at the age of 88. And so that's obviously awesome, and it speaks for the movement. But what it also shows you is that it may not be John and his peers who are not seeing the obvious. I think John is presented with the challenge of convincing the board to try out AI strategies and so on. And so both my co-founder Chris and I are starting to find ourselves more involved on board levels of credit unions, because what credit unions tell us is, look, we just don't have somebody on our board who has the perspective. We have accountants, we have operators, we have other members from the community, but we lack a board member who has like a good understanding of cutting edge fintech. And while I'd argue it's quite obvious what the credit unions need to do in terms of embrace new technologies, it's not always obvious to the board. And it sounds like there's an opportunity for us to get involved in the board level and help the board see and realize how important these trends are. And I found ourselves being impactful recently there. Does that resonate, John?
It does, yeah. That's true. I think I view my role as more of a liaison. Nikki and Sarah will bring this cutting edge technology and explain it to me, and then I'll try to boil it down into layman's terms, which I understand, and then I can pass it on to the board. We've been blessed. Their motto is it's okay to fail, just fail quickly. So we're always open to hearing new ideas, giving it a shot, knowing an exit strategy if one is needed. But yeah, we try to stay on the cutting edge, but it's our partners that are out there creating things, testing things out, and then bringing it to our attention. That's really the only way we can stay ahead, I think.
Well, we are at time. I do want to thank our panelists, John, Sarah, and Nikki, for a great conversation. And like I mentioned at the top, we just scratched the surface on this. And, even though the topic was how can credit unions drive more non-interest income, that's just the beginning of the conversation, because before you can drive that top line growth, you have to be able to have the infrastructure and the partners to help you on that journey. And it's all about taking those first steps. So really appreciate all the insights. Hopefully we can continue the conversation with our colleagues in the credit union system to get the word out and make sure that everyone is working towards those goals to help better the member and that overall experience. So thank you again.
Thank you.
Thanks for having us. Bye-bye.